If you follow silver, you've probably seen headlines and videos claiming that the Shanghai Futures Exchange, SHFE, is exposing manipulation because the exchange has been suspending accounts for trading violations. That theme is exploding online right now, and it matters because stories like this can move sentiment fast, especially in a market as emotional and volatile as silver. But today, we're going to do something more useful than hype. We'll unpack what SHFE actually reported, what it may signal about market stress, and how a US-based viewer can connect this to silver prices, volatility, and positioning without jumping to conclusions. Let's start with what we know from official exchange communication. SHFE published a self-regulation update stating it handled 73 cases of abnormal trading behaviors in a single month, including self-trades and frequent order cancellations, and that it suspended certain clients and groups of accounts from opening new positions on relevant futures contracts. Shanghai Futures Exchange notice. Now, the 22 accounts number has been circulating widely in social media and video commentary. But here's the key. Exchanges around the world routinely investigate and penalize behaviors, like wash trades, spoofing-like patterns, excessive cancellations, and rule breaking around position limits. A crackdown can mean multiple things at once. Stronger enforcement, a period of unusual volatility, or simply the exchange reminding participants that it's watching closely. Shh. Why does this matter for price? Because silver is a two-worlds metal. It trades like a risk asset sometimes, like a crisis hedge other times, and it also has a heavy industrial footprint. That combination can create sudden air pockets, sharp spikes up, then fast drops that feel engineered, even when they're driven by mechanics like liquidity, leverage, and forced deleveraging. And the broader context right now is intense. Reuters recently reported dramatic swings tied to China's silver-linked products, specifically China's Seoul Silver Futures Fund, experiencing steep declines after a surge and then a violent reversal, with trading halts designed to protect investors and warnings about premiums to NAV. Reuters, Feb 6, 2026. That's important because retail-driven surges, especially in products that can detach from fair value, often end with whiplash. When that whiplash hits, exchanges tend to tighten oversight, raise margins, limit trading behaviors, or suspend rule breakers. Not because there's some movie villain conspiracy, sometimes because volatility itself is the emergency. The bigger silver story in 2026, supply-demand deficit meets investor demand. Shh. Now let's zoom out. Because the real long-term driver isn't one enforcement headline, it's the structure of the silver market. The Silver Institute recently highlighted that silver's underlying fundamentals remain supportive and that the market is expected to remain in deficit for a sixth consecutive year in 2026, with total supply forecast around 1.05 billion ounces and the market deficit estimated around 67 million ounces. A Silver Institute outlook. Reuters echoed the same theme, overall demand expected to hold steady, industrial fabrication forecast lower due to thirst substitution in solar, but physical investment demand rising while the market remains structurally tight. Reuters, Feb 10, 2026. So here's the tug of war. On one side, you have industrial demand that can soften if manufacturers reduce silver usage per unit, especially in photovoltaics. On the other side, you have investment demand returning strongly, and a multi-year deficit that keeps the physical story tight. What US viewers should watch: positioning and leverage signals. Shh. If you're in the US, you also have a powerful transparency tool, CFTC Commitments of Traders COT. The CFTC's data for silver futures. COMEX shows open interest and how positions are distributed across non-commercial and commercial categories. That doesn't prove manipulation, but it can help you understand when the market is stretched and vulnerable to squeezes or liquidation cascades. CFTC COT COMEX silver? When open interest is high, positioning is lopsided, and volatility picks up, the market can move in ways that feel irrational. Add in global flows between regions, US, futures, London liquidity, China products, and the narrative can get wild fast. So was silver manipulation exposed? What we can responsibly say is this: SHFE enforcement is real, and it may indicate the exchange saw behavior it deemed abnormal enough to act on. Shanghai Futures Exchange notice. Shh. What we cannot responsibly claim without direct evidence is that this automatically proves a coordinated, centralized silver price manipulation scheme. Markets can be distorted by bad actors, yes, but they can also be distorted by leverage, thin liquidity, forced margin selling, and herd behavior. Often, it's a messy combination. Practical takeaway for investors and viewers. If you're tracking silver prices right now, don't focus on just one dramatic headline. Shh. Watch the three layers instead. First, physical fundamentals, deficits, recycling flow, investment demand. Silver Institute outlook. Second, product stress, signals like fund dislocations, and trading halts that can amplify swings. Reuters, Feb 6, 2026. Third, positioning and derivatives pressure use COT as a dashboard, not a conspiracy decoder. CFTC COT, COMEX Silver. If those three layers align tight physical market, retail frenzy, and crowded futures positioning, you can get explosive upside and brutal downside. That's silver. Disclaimer. Include in your video, this video is for educational and informational purposes only and reflects opinions as of the publication date. It is not financial advice, investment advice, or a recommendation to buy or sell any asset. Shh. Commodity markets, including silver, are volatile and involve substantial risk. Always do your own research and consider consulting a licensed financial professional before making investment decisions. Past performance is not indicative of future results.